Hi everyone, welcome to the next episode of Real Sense Retirement. I am your host, Isaiah Riel, financial advisor with Lugan Wealth Advisors. I have 3 questions for you today. Recap, markets were down here in December, markets were down in 2018. There's quite a few questions that people have asked me about what happened in the markets. Should I be worried or should I be making adjustments? What should I be looking out for moving into 2019? Question number 1, when do you know it's time to switch investing strategies? Okay, good question. So I use something what's called the Bullish Percent Index. It's by Dorsey, Wright and Associates. And so I use what's called the Bullish Percent Index. It's a chart. It's a chart based off of 0 to 100. And what it is it shares with you the percentage of stocks that have relative strength buy signal. So obviously if there's a buy signal, odds are is, hey, the stock's doing pretty darn well. If 100% of the companies have relative strength buy signals, well then the markets must be doing very well and the companies must be doing very well. If 0% of the company or close to that have buy signals, so in a sense none of them have buy signals, all of them have sell signals, well then odds are is those companies are not doing very well. And the markets are probably having a very tough time at that point. And so I keep track of this because it allows me to have breadth of what the market is doing and what's happening out there. I look at it as a football field. When we think of football, there's 2 people out there. There's the offense and there's the defense out there. If 50% or more of the companies have relative strength buy signals, we are going to have the offense on the field. If 50% or less of the companies have relative strength buy signals, then we're going to have the defensive team on the field. So that's the first step. If we're looking to invest, we need to know who is on the field, offense or defense, because both teams have different roles. If the offense is on the field, our number 1 job is to score, just like in football. Our job is to take as much returns from the markets as possible. By doing that, we have to look at relative strength, what investments, individual stocks, ETFs, mutual funds, what investments are giving us the highest returns based off of relative strength scores. We want those, we want the highest ones, we want those to give us the most odds in our favor to get returns while the markets are doing well and while we have the offense on the field. Let's reverse that. Let's say the markets are not doing very well. We have the defense on the field. Our number 1 job is to defend. When the defense is on the field, the stock market has a very important role. In the stock market's role, their job is to make sure they take our returns from us as much as possible. So it's up to us to defend, to have a strategy, to have a process in place to defend for what the market's trying to do. So right now, we have a defensive team on the field. From 2009 until 2018, we had the offense on the field. We had to make sure we had to score as much as possible with individual stocks, with mutual funds, with ETFs. That was our job. In 2018, that changed. We put the defensive team on the field. The markets took over, and their main job was to take returns from people as much as possible. So when we have the defense on the field, as we do right now, that doesn't mean we're going to get negative returns in the markets or, oh my gosh, what's going to happen? We can still get positive returns, absolutely. But we have to make sure we have the right process in place. With the defensive team on the field, we don't look at individual stocks. I mean, yes, obviously you can, but there's going to be a heck of a lot more risk when it comes to that. So that's why I suggest is no individual stocks. Let's focus more so on ETFs, exchange traded funds, mutual funds. Let's have more monies in cash and safe money, so CDs. Let's have more monies there and not have more monies in individual stocks, but more so in mutual funds or ETFs. Because again, remember, individual stocks have higher risk associated with them. Mutual funds and ETFs have lower risk compared to what individual stocks give to us. So we want as least risk as possible. Granted, we can't take away risk. That's part of the game. But if we can minimize that as much as possible, hey, that's being defensive. That's helping us long term. And so that's what, to answer your question, long story, when do you know it's time to switch investment strategies? It tells me is when 50% are higher, we're on the offense. 50% are lower, we're on defense. Right now, we're on defense. And that changed here in 2018. Second question, is there anything I can do to improve my retirement planning in 2019? Okay, great question. Yes, there is. Keep it simple. Continue to do what you're doing. Sometimes people think, and sometimes people feel that they have to make a drastic improvement or a drastic change to really make a difference or an outcome when it comes to their investment strategy or when it comes to their investment savings. And odds are, and majority of the time, is that's not what we probably should do. Odds are is keep what we're doing. Continue to invest in your portfolios. If you have a monthly paycheck or regular paycheck coming out, and you're putting monies away into your retirement accounts, great. Do that still. Continue to contribute to these portfolios. Because even right now with markets being down, that's a great thing because guess what? Prices are cheaper. So you're getting cheaper prices on your investments. And long term, hey, odds are those prices are going to go higher. So continue to contribute to your plans. Another thing I would look at is, I mentioned to you in previous videos, is have the highest relative strength sectors out there. Look at my previous videos. I tell you what those highest relative strength sectors are. Right now, they're technology, healthcare, utilities, industrials. On top of that, I would suggest is if you have a budget, great, keep track of it. Know what your expenses are on a monthly basis because when you retire, you're going to need to know that. If you don't have a budget, this is a great time. This could be where you make this adjustment. Keep track of what your expenses are, how much you're spending on a monthly basis, and make a budget for yourself because when you retire, you're going to need to know what these numbers are because you're going to have to know what your lifestyle is going to be in retirement and be able to withdraw how much you need on a monthly basis. So to answer your question, keep it simple. Continue to contribute. Invest in strong relative strength sectors. Know what your budget is or know what your expenses are on a monthly basis. Question number 3, what are the top sectors according to the metrics you use for the start of 2019? Okay, good question. In fact, I just sort of gave you the answer to this. According to Dorsey, Wright & Associates, again, I use them quite a bit. I use their strategy of, hey, relative strength. What sectors are going to be doing well? Meaning odds of looking to outpace what the S&P 500 does long term, meaning more than just 1 year, but years. From the highest relative strength score downwards, number 1 is technology. Number 2 is utilities. Number 3 is healthcare. Number 4 is industrials. Those are the 4 sectors, the strongest sectors right now when it comes to relative strength moving into 2019. If you want to get a little bit more specific inside technology, there's software, there's cybersecurity, there's internet. Maybe you take a look at those areas. When it comes to healthcare, there's pharmaceuticals, there's biotechnology, there's hospitals. So you can get very creative if you want to when it comes to sectors. But keeping it simple, those are the top 4 sectors that I'm looking at moving into 2019. Technology, utilities, healthcare, and industrials. Without further ado, those are the questions I have for you today. If you have any questions, if you have any thoughts, if you would want me to answer a question for you, please feel free to let me know. Feel free to give me the question. I look forward to talking to you soon. Thanks so much. Happy New Year. Have a great start to 2019. I'll talk to you soon. Bye.